Hi, beautiful bombshells. I'm coming to you today to talk to you about tax season. It is coming up. And if you're like me, you haven't thought about it much this year if you've been with us through the entire year. Or if you're new, you haven't thought about it either. So I wanted to go over some things with you and get you set up so that you can be successful and not be scrambling at the end of the year for your taxes. I have a tendency to just shove receipts in an envelope and forget about them. I have to go back and create a spreadsheet. So actually, I'm good through about April, and then I have some catching up to do. But anyway, just so that you know, with your Younique business, you are a self-employed person, which means that Younique will send you a what's called in the US, taxes outside of this country or whatever it's called. I am unaware of how this works for you, but for the United States tax purposes, I also want to make a disclaimer. I am by no means a tax professional. This is just things that I have found to be helpful tips to remember when working on information for your taxes. Please seek out the advice of an accountant or whoever in order to get better detailed information. Anyway, back to the regularly scheduled program. Anyway, I'm not going to delete my bloopers. I'm going straight through this one. All right. So, based off of how we are paid, in order for you to get to receive a 1099 from Younique, you have to make, I believe it's $500 or $600, one of the two, in that tax year. So what that means is you have to sell about $2,500 worth of makeup in order to receive a 1099. However, and this is where the catch comes in. However, that is how much you have to sell because you have to earn the $500 or $600. But that only counts on customer orders placed through your website. Anything placed through your website in your name, your cash and carry, your own product, your samples, any of that is not included in that total. Younique does not put that on your 1099 because anything purchased under your name, they have the expectation that that is your product and you are getting it at that discount. Therefore, they consider it a purchase, not a sale. Okay, I hope that makes sense. It is a little hard to understand. Not 100% sure as to the reasoning all behind that. I get it to a point, but because we do such a large cash and carry business, it does put the financial burden of the tax information on you because you can't just say, oh, I don't have to pay taxes on it. You still have to pay taxes on it if you sold that product to another person and received money back for it. Granted, if you have products in there that you used for samples, for giveaways, anything like that, those are also tax write-offs that you would do if you itemize your taxes. So you definitely want to put those aside as well. So you're going to want to keep good track of anything you purchase under your name and what it was for and the customer list in case you were ever audited. So make sure you keep all of your receipts also for anything that you purchase that's related to your business. If you purchase a new iPad to run your business, if you purchase, it's a potentially something that you can write off. Larger purchases like that, there are some other tax rules. I don't know, but just so you know, that was a bad example to start with. We'll go smaller. Printer ink, if you're printing off anything, your catalogs that you order, any business cards that you order, and marketing supplies. If you take a customer to coffee and have a discussion with them, trying to get somebody to sign up, if you take somebody out to lunch, if you have a meeting, if we meet up and we go to lunch, all those things are able to be written off for your taxes. Keep good lists of all that information. Keep your receipts. You can also you can also tax deduct your mileage for meeting with customers for deliveries, for going to the post office, for those coffee and lunch meetings, any of those places that you go there for your business, then you can write those off for taxes also. So keep track of all of those things. Make sure you keep all of those receipts and all that information together. That mileage you're going to want to diligently track. If you don't keep track of it early on, you just keep a list of it. Feel free. What I usually do is, because even all those receipts, like if I went to the office supply store, the mileage to and from that office supply store is tax deductible. So I just go to my receipt, take that little address, plug it into Google Maps, grab the mileage that way. So that is how I do it for that. To make it easier instead of every day checking my odometer and things like that, because that just isn't going to happen here. So those are a few little tax tips. I wanted you to be prepared, wanted you to have the information you needed to be successful in your business as a business owner. These are definitely things that you need to make sure you're keeping in your mind. So if you haven't started putting your information together for the year for taxes, get on it. I'm only saying this because I need to. So there you have it. Have a good evening, and bye. Love you, girls.